Canadian oil and gas stocks are some of the best opportunities in the stock market right now. Let me tell you why today confirmed why I think these have been incredibly overlooked, why I think they are being discounted for foolish reasons, and why I think investors are going to make millions. Welcome to Larch Investing. My name is Liam. On this channel, we love talking about Canadian investing. If that interests you, please do subscribe to the channel. Today, we're going to focus on the oil and gas industry because I think these guys are incredibly overlooked. They are being discounted heavily because of all of the fears about tariffs and because of some massive news for the oil industry. Let me talk about what that news is. It's been a little overlooked today because tariff news has just been every headline. Yesterday, OPEC Plus announced plans to dramatically increase production. We're talking significantly faster and significantly more than any analyst had predicted, which obviously tanked the worldwide price of oil. Now, this can be a good thing for people who use a lot of energy. So industrials are going to love this. Maybe transportation companies are going to love this, right? Because they can all of a sudden get this resource quicker. Obviously, as an investor in the industry that produces oil, not great short term. But as a Canadian investor, I think we're actually missing the point here. Because again, Canadians have always had their oil discounted versus WTI price, not to mention whatever you can get on a worldwide market. And that's the real story here in Canada. And right now, April of 2025, I think we're more and more cognizant of the fact that the opportunity is not the worldwide price of oil. It's the WCS price. What can we get for Canadian crude? A big part of this is talking about the differential. I've talked about this several times on the channel, but obviously Canadian crude sells at a massive discount. Right now, we're talking like $10 a barrel, which is actually not that bad. It has been dramatically worse. I've seen in times of crisis, it spike up to like $50 a barrel. Huge differential. My major bull thesis is all about getting rid of this. And it's thanks to energy infrastructure that finally Canada seems willing to invest in. Now, can't get your hopes too high, but we've seen projects like LNG Canada and the TMX come online, spending billions of dollars and creating massive opportunity. If we can continue to see projects like this, we are going to see these companies explode upwards. Valuations will shoot through the roof. We will see the WCS price come up to that WTI price, and we're going to see a massive amount of free cash just handed to the producers. These are the companies I've been heaviest invested into. These are companies like CNQ. These are companies like Tourmaline. All of these big major producers are seriously good buys. And there's one real trick that makes me more confident as a long-term investor than I have been in a really long time. And it's all about longevity. The argument against my bull thesis has been, it's Canada. We're not going to invest in energy infrastructure. We never have. Or at least not for at least 10 years. Well, even though it might be true that Canada really struggles to get pipelines built, we can simply wait. I'm a long-term investor. I want to have my money sitting in these companies for 10, 20 years. And the best thing about Canadian oil and gas companies is their assets have run times of decades, not just years. The oil sands have hundreds of years of production growth versus a couple years in shale oil down in the US. And that means I can be completely wrong about energy infrastructure, which I don't think I am, and I will still profit. And yet, today we've seen a lot of these companies dropping high single digits. You know, we're dropping the same level as big tech stocks. We're dropping companies like CNQ and Cenovus, the same as Apple. And I'm really confused why. Because the tariff threat is huge. The potential damage that might be caused to the global economy is massive. But the increase in OPEC production, I mean, what else is really impacting CNQ? We haven't seen Canada named recently, so maybe their exports to the United States will be fine. We haven't confirmed how long these tariffs will be around for. We don't know that it'll actually slow the global economy in the long run. And why would they be as impacted as a company who sources most of their stuff from Asia, who are now going to pay high double-digit tariffs, like, 30%? I just don't get that. And I think what we're seeing here is fear. I think we're really seeing a lot of fear in the market, and people are selling off things they're less certain of. They're gonna rush to safety. They're gonna rush to companies like the banks. They're gonna rush to bonds. They're gonna rush to gold. They're gonna just avoid risk assets. And most of the people doing these moves, the people who really move the markets, are not you and I. They're not long-term individual investors. We're talking funds. And the one real trick that separates an investor from a fund is we don't need our returns to be analyzed on a quarterly basis. I can be wrong for 11 months out of the year and still have a good year. I could be wrong for years in a row and still make a huge profit on my portfolio. If you run a fund, you can't do that. And so they're fleeing from the stock market, letting whatever will happen shake out so that they can still look like they made a good choice. And I think that's incredibly foolish right now. The real play, in my opinion, in the Canadian energy space is to be investing in major producers, big companies, well capitalized, lots of money. A lot of these companies have been cutting out debt. They've been really focused on this ever since they sort of got burned by it in the last boom bust cycle. And so they're in a position where they can continue to burn. They are all good. They've got lots of cash and they have huge efficiencies that let them just ride the decrease in prices and still be profitable. I've seen numbers like $35 a barrel where they can still break even. If that's true, then we don't care about any of this economic news. You don't have to care about the macro at all. You can simply just continue to invest dollar cost average over time. And if they're going to give you a huge discount on a day like today, buy it. Somebody's going to sell you something that was worth whatever we're going to say they were worth. If it was worth 100% yesterday and you're selling it to me at 90% of the same price today, it's going to be worth much more than that in the future. So as you see these discounts appear in Canadian oil and gas stocks, I personally am going to be buying. And if you're a long-term investor, if you believe in the ability of these companies to just ride out whatever is going to happen and continue to be massive, massive cash flow machines in the future like I do, then you should be looking to pick up shares too. Not to mention the fact that we're going to see some massive, massive gains in these companies thanks to things like LNG Canada coming online. Not to mention the fact that any project being approved, we're going to see spikes in these companies from investors suddenly rushing back. And not to mention that we have a huge opportunity in Canada to realign ourselves, to, make new trade deals, to push towards a future where we can get our resources to market at a much better price. And I don't know how many investors have had that opportunity in their lifetimes, and I don't think I want to miss it. That's about all I have for you folks today. I hope you enjoyed the video. Definitely an unscripted one. Just wanted to talk about what was going on in a sort of, uncensored way. If you enjoyed this, please do subscribe to the channel, like the video. It makes a huge difference, doesn't cost anything, and I really do hope I'll see you in the next one.